Hello traders, it's Wednesday, August 16th, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instruments, we are referring to the US dollar index in 4-hourly charts. Okay, so the US dollar index, which measures the greenback ranks against the trade weights basket of 6 major currencies, was traded higher against a basket of global currencies on Tuesday, rose by 0.39% to 93.73, and it was buoyed by the retail sales data that topped forecasts, pointing to a rebound in consumer spendings, which also lifting the expectations of solid economic growth in the second half of the year. So according to the Commerce Department said on Tuesday that retail sales rose 0.6% last month, and that was the largest gain in 7 months, so ending 4 consecutive months of lower than expected growth. Also lifting sentiment on the dollar were comments from Bill Dudley on Monday, the New York Federal Reserve chief, who is seen as an influential voice on the central bank's policy setting committee. And Mr. Dudley said he would favor a third rate hike this year, even as Wall Street expectations for such a move have dipped below 50%. And meanwhile, the safe haven's assets which jitters continue to ease, as North Korean state media reported Tuesday that leader Kim Jong-un had delayed a decision on firing missiles towards the US Pacific territory of Guam, and suggesting that his earlier threats were rhetorical. So in the wake of cooling tensions between the US and North Korea, demand eased for safe havens currencies such as the yen and the Swiss francs, prompting the dollar to call back recent losses. So the pair USD or JPY rose 0.76% to 110.47, and as for the USD CHF rose to 0.9726. While the pound, the Great British Pound, was traded lower against the US dollars, fell 0.76% to 1.2866 on Tuesday. So this was following the data showing UK inflation was undershot economists' forecast. So this was cooling expectations the Bank of England would look at tapering its losing monetary policies measures sooner rather than later. As for the euro, the pair EUR-USD lost 0.36% to 1.1738 and down 0.37% after Germany, the Eurozone's largest economy, reported weaker than expected growth in the second quarter. Having a tad in commodities markets, the gold price fell on Tuesday, down $10.83 or about 0.84% to $1,279.46 a troy ounce, as the US-North Korea tensions eased, after North Korean's leader Kim Jong-un was reported to have delayed a decision on firing missiles towards the US Pacific territory of Guam. So gold price struggled to shake off losses as demand for safe haven assets was cooled. And meanwhile, better than expected US retail sales data for July took expectations of stronger US economic growth in third quarter, adding further pressures on the yellow metals. So the minute from the Federal Reserve July policy meeting due Wednesday, however, could stem loss in the yellow metal should the minutes revealed Federal Reserve members were more dovish on monetary policy than initially believed. So at its policy meeting in July, the Federal Reserve members voted to keep rates unchanged, inciting concerns over the slowdown in inflation. The central bank, however, signals that it will begin tapering its 4.5 trillion balance sheet relatively soon. So gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. While the oil price was settled lower on Tuesday, fell 4 cents to settle at $47.55 a barrel, as data showing weaker than expected oil demand in China continue to weigh on sentiment, while concerns remain OPEC may struggle to tackle the glut in supplies, following a drop in compliance with the deal to curb productions. So crude price started the sessions on the back foot, falling to 3-week lows following data on Monday showing Chinese oil refineries in July operate at their slowest rates in nearly 12 months. So the downbeat data fuel concerns that a glut of refined fuel production could lessen demand for oil from China. So the world's second largest consumers, reducing the prospect of oil inventories falling below the 5 years average. So meanwhile, an announcement by the Nigerian subsidiary of Royal Dutch Shell that it had lifted a force majeure on the Bonny light crude exports also added to oversupply jitters. So crude price attempted to pair loss in the late afternoon US sessions as investors look ahead to bullish US crude inventory data from the American Petroleum Institute on Tuesday, as well as a further report from EIA on Wednesday. Analysts forecast crude inventories fell by 3 million barrels in the week ended August 11th, the 7th straight week of declines. So an uptick in US shale production, however, is expected to curb sentiment on oil price after the EIA said on Monday it expected to see a climb in crude output from key US shale regions of 117,000 barrels per day in September to 6.149 million barrels per day. According to Robbie Fraser's commodity analyst at Schneider Electric said, while global inventories have managed to decline in recent months, the trades of US shale has meant inventory draw have found difficulty providing significant price support. So now we're gonna review the highlighted economic data and events that on yesterday, as well as the focus data and event for today. So yesterday, the Australia Reserve Bank of Australia was released its meeting minutes, okay, and during the European trading hours, Germans was released their gross domestic products for the second quarter, and it was slightly disappointed with only 0.6% growth. And as for the United Kingdom, it will release the Consumer Price Index, which refers as inflation report for July, and slightly disappointed as well at 2.6% growth. During the North America trading hour, so the United States was released the core retail sales, okay, a series of retail sales data for July, and it is better than expectations. So this is the main support for the US dollars on yesterday. And as for today, we can focus on the data that will be released by the United Kingdom during the European trading hours later, which including the average earning index plus bonus for June, as well as the claimant count change for July. And later tonight, United States is going to release the building permits for July, as well as the midnight 2 o'clock. FOMC will be released its meeting minutes, okay. And there's another data for the crude oil, which is the crude oil inventories from the EIA of United States, okay. It's technical analysis sessions here. So the first instruments we're referring to the GBP USD in 4-hourly charts. So the pair was remain traded in the downtrends after the price plunged to the level below the support level of 1.29400. Okay, so the both moving average line was remain expanding downwards. Additional with the MACD showing a downward signal with both movement line expanding downward and momentum was stronger below the zero levels. Okay, so a price closure below 1.28400 is a signals for it to drop further towards the next support level at 1.27400. So as for the resistance level, we refer to 1.29000. As for the euro, the pair will remain traded in an uptrend, so but seems like still losing momentum. So it is expected to remain ranging between 1.16900 and 1.18300. But it was rebound from lowest level of the range, so it is expected to move slightly higher in short term within the range. So a price closure that's below 1.16800 signal to retrace more in short term and fall further towards the next support level at 1.16100. Otherwise, a closure below 1.18500 suggests to move further higher towards the next resistance level at 1.18800. As for the Kiwi, it was remained traded as a downtrend against the US dollar, and the price was closed below the support level of 0.72500 and hit the targets which set previously at 0.72200. So the both moving average lines were still expanding downward, and the additional with the downward signal showing MACD, so a price closure that below 0.72200 signal to drop further towards the next support level at 0.71500. And the Aussie remained traded in an uptrend against the US dollar, but it is still in a retracement period, so the price was failed to close below the support level of 0.78100. Is a signal to move slightly higher in short terms, but however, the closures below 0.78100 suggest to change the trend directions, become downtrend, and fall further towards the next support level at 0.77600. And the Japanese yen remain traded in a downtrend, but currently is retracing, so a price closure that's above 110.100 signal to retrace more in the short terms and move further higher towards the next resistance level at 111.600. While to commodities markets, the gold price remained traded in an uptrend, but still losing momentum and expected to be ranging between 1,270 and 1,288 for short terms. And based on the downward signal showing MACD indicator, closure that's below 1,267 suggests to retrace more and fall further towards the next support level at $1,259 a troy ounce. The oil price remained traded in an uptrend, but currently still retracing, so the both moving average lines will remain expanding downward following a formation of dive cross, so applies closures that below 46.90 signal to retrace more in short term and fall further towards the next support level at 46 and 46.30. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.